Let's get back to Micron in the meantime. Those shares are jumping in overtime after posting on the back of a strong Q2 report. Joining us now is Angelo Zino from CFRA. Angelo, it's great to have you on. Now, it seems like they've posted profit adjusted, EPS, positive EPS, which the street was not expecting, gross margins in terms of the forecast above expectations, and it also looks like the guidance is above expectations. Walk me through it.
Yes, you're absolutely right. So, I'd say in terms of profitability, they got there a quarter sooner than everyone anticipated. And, I think really on the gross margin side of things, that's where we kind of get most excited about posting a gross margin of 20% for this quarter relative to our expectation of about 14%. And when you kind of look at the May quarter, about 26.5% or something, and we were looking for closer to 22%. And I think a lot of it has to do with strength on the pricing side of things. And specifically on the pricing side of things, there is, we think, a favorable mix going on in terms of kind of more DRAM on the data center side of things, specifically high bandwidth memory, which is what everyone, I think, is interested about. But when you kind of look at some of the commentary that they provided, at least in terms of, the initial things I saw was that they are largely, or they are sold out for their high bandwidth memory capacity for the rest of 2024 and largely allocated in 2025. So we think that's a big deal out there. If there is potentially a shift or change in perception of Micron here in terms of maybe being more of a commodity type company towards one of having this secular growth opportunity out there, it's going to be on that high bandwidth memory side of things, given the attachment to AI there.
Okay. Something to watch here, certainly with the call getting underway. I'm going to ask you about Intel, too, because we know Intel's making $100 billion worth of investments across 4 different sites in the U.S. How much does this CHIPS Act funding and the loan contingencies attached to it as well, how much does this matter for Intel? Is it meaningful for investors to get, even more behind the stock now?
So it matters in the sense that, hey, it's going to help, meet or fund, future capital spending needs. You pointed to the $8.5 billion, and they spent north of $20 billion in each of the last 2 years. We expect them to spend north of $20 billion this year, as well as in each of the next 2 years out there. Does it matter out there for investors? Not necessarily. I mean, our view was they were going to get about $8 to $10 billion here. So that $8.5 billion kind of is in line with our expectation. But as you kind of look ahead, I mean, this is still kind of a long-term time frame out there before the stock really starts to work because of all of the capital-intensive needs for this company. So as a result, the opportunity cost holding this name right now relative to other semiconductor names just doesn't make sense to us, which is why we continue to have a hold recommendation on Intel and favor the other names out there like an NVIDIA, AMD, Micron, for instance.